Hello, welcome to the market opening bell on Monday, June 30. Your 10-minute guide to the stock market. The Hang Seng Index opened 125 points high last Friday, but fluctuated, peaking at 24,471, up 146 points, and dipping to 24,194 points, down 130 points in the afternoon. It closed down 41 points or 0.2% at 24,284. The H-share index fell 41 points or 0.5% to 8,762, and the Hang Seng Tech Index dropped 3 points to 5,341. Total market turnover was 275.1 billion Hong Kong dollars, with southbound trading at 153.8 billion Hong Kong dollars. For the week, the Hang Seng Index rose 753 points or 3.2%. The H-share Index gained 235 points or 2.8%. And the Tech Index climbed 208 points or 4.1%. Southbound funds net bought 3.037 billion Hong Kong dollars in Hong Kong stocks on Friday, including net buys China Construction Bank 1.338 billion Hong Kong dollars, SMIC totaling 629 million, Beijing totaling 209 million, Crown Champion totaling 172 million, China Cinda 161 million, Innovent Biologics 142 million, Xpeng 102 million. Net sales Xiaomi 3.252 billion, Alibaba 797 million, Tencent 770 million, Meituan 178 million, Guotai Junan International 142 million. Southbound funds have net sold Tencent for 21 consecutive days, totaling 21.569 billion Hong Kong dollars. Net bought China Construction Bank for 13 days, totaling 9.359 billion dollars, and SMIC for 7 days, totaling 4.91 billion dollars. Technically, the Hang Seng Index hit 24,533 last Wednesday, but the 9-day move RSI was only 65, indicating limited upward momentum. This week is expected to consolidate before retesting 24,500. A breakout above 24,500, targeting the March high of 24,874, depends on stronger RSI and turnover. Mainland China markets were mixed on Friday. The Shanghai Composite fell 24 points or 0.7% to 3,424, up 2% for the week. The Shenzhen Component rose 35 points or 0.34% to 10,378, up 3.7% weekly. Today, China will release June official manufacturing PMI, forecast 49.6, previous 49.5. Unknown manufacturing PMI, forecast 50.3 versus previous also 50.3. Xiaomi saw its YU7 electric vehicle receive nearly 290,000 orders in an hour last Thursday. Its stock surged 8% to a high of 61.45 Hong Kong dollars, closing up 3.6% at 58.95 dollars last Friday. However, reports indicate YU7 Standard Edition delivery takes 53 to 56 weeks and Max Edition 33 to 36 weeks, at least 8 months. Other car makers fell. BYD fell 1.2%, Li Auto 1.8%, Xpeng 3.2%, NIO 1.8%. Li Auto revised its Q2 2025 delivery outlook to 108,000 vehicles, down from 123,000 and 128,000, reflecting short-term impacts from sales systems upgrades. 3 IPOs will debut today. IFBH, stock code 6603, selling IF Coconut Water, closed at 43.9 Hong Kong dollars in Phillips Mass Grey Market, up 57.9% from its IPO price. Per 200 share lot, paper profit is $3,220, excluding fees. MedTai stock code 3880 closed at $31.75, up 3.8%. Per 100 share lot, paper profit is 115 Hong Kong dollars. Unisound AI Technology, stock code 9678, closed at $200, down 2.4%. Per 20 share lot, paper loss is $100. U.S. Commerce Secretary Lutnick said the U.S. and China are close to a trade deal framework, with agreements expected soon with 10 major partners. However, President Trump threatened to end Canada trade talks over its digital services tax on tech firms, raising tariff concerns. U.S. indexes were volatile. The S&P 500 and Nasdaq hit record highs but dipped mid-session. The S&P 500 closed up 32 points or 0.5% at 6,173. The Nasdaq up 105 points or 0.5% at 20,273, both at all-time highs. The Dow rose 432 points or 1% to 43,819. The Nasdaq Golden Dragon China Index gained 15 points or 0.2% to 7,375. For the week, Dow was up 3.8%, S&P 500 up 3.5%, Nasdaq up 4.2%. Tech stocks had mixed performance. Nvidia was up 1.8% to 157.75 US dollars, which is a record high. Meta up 1% reportedly, raising up to 29 billion US dollars for US data center expansion to boost AI. Tesla was down 0.6%. Elon Musk announced the first Model Y delivered from Austin via autonomous driving without human intervention. Apple steady. Microsoft down 0.3% after reports of delays in its Braga AI chip due to design changes and staffing issues. Expected to lack Nvidia's Blackwell chip. Nike soared 15.2% despite a 12% Q4 sales drop, signaling the worst is over. On economic data, May PCE price index rose 2.3% year-on-year as expected, up 0.1% month-on-month. Core PCE plus up 0.2% month-on-month, about 0.1% expected, and up 2.7% year-on-year, about 2.6% expected. May personal income fell 0.4% month-on-month versus expected up 0.3%. Spending was down 0.1% versus 0.1% expected, 0.1% gain expected. June Michigan consumer confidence was revised up to 60.7 from 60.5, about 52.2 in May, the first rise in 6 months. One-year inflation expectations fell to 5% versus 5.2% expected. As Middle East tensions eased, reducing safe haven demand, WTI and Brent crude fell 12% last week. OPEC Plus may extend its large-scale production increase plan next month, having raised output by 411,000 barrels per day monthly for the past 3 months. Our stock pick today is IGG, stock code 799. IGG is a globally renowned mobile game and application developer and operator with a vast customer base spanning over 200 countries and regions. It offers mobile games in 23 languages, boasting approximately 1.5 billion total game users and over 17 million monthly active users. Since 2013, the group has actively expanded beyond gaming, successfully building a proprietary traffic platform centered on app services, replicating its global user acquisition strength from gaming to the app business. In 2024, the app business achieved 62 million monthly active users worldwide, generating approximately 1.1 billion Hong Kong dollars in revenue, further solidifying the group's diversified strategy. The rapid growth of the app business not only established a traffic platform that advances alongside the gaming business, but also strengthened the group's competitive moat in the increasingly competitive gaming industry. In gaming, the 9-year-old evergreen title Lords Mobile remains robust, contributing nearly 2.6 billion Hong Kong dollars in revenue in 2024. Two newer titles launched in 2023, Doomsday, Last Survivors, and Viking Rise, underwent 2 years of refinement and optimized operations, generating approximately 1 billion Hong Kong dollars and 700 million in revenue, respectively in 2024. Together, these two titles accounted for 30% of the group's revenue, forming a trio of flagship strategy games alongside Lords Mobile, creating a stable and balanced gaming revenue structure. The group continuously evolves to enhance player experiences, introducing innovative features such as player-hosted gameplay and alliance votes in Doomsday, Last Survivors, and Team Battle Royale and Trade Route Supremacy Guild Wars in Viking Rise. It extends product life cycles through gameplay integration and social interaction while leveraging AI to reduce development costs and improve user acquisition precision, maintaining competitiveness in a rapidly changing market. In 2025, the group plans to launch two major strategy games, Frozen War and the PSS Project, along with a significant casual game, Tycoon Master. The app business will aim to further increase revenue and expand its platform development. Recommended buy price 4.2 Hong Kong dollars, target price $4.6, stop loss $4. I do not hold the above mentioned stock.